have with us Jen Dobson, who is the owner of Degrees of Success, and her company. You should check her out. Can we do books by Genevieve? Hold on one second. Degrees of Success. I don't know. I'll let Jen get into that. There's too much for me to read, and she's so much more knowledgeable than I. Hey, Jen, welcome to Greenberg News.
Hi, how are you doing?
We're doing outstanding. I'm telling you, she is the hottest thing in college ed, because it's people are going broke or getting broke or will be broke, and you're here to I don't know how you do it, but she knows where all the bodies are buried and how to save people lots of money. So
yeah, absolutely.
So the floor is yours, Jen. So tell us all about your business and how you came to become a college financial expert.
Sure, definitely. So I've been doing this for 10 years now. I started off doing mainly student loan consolidation for another company back when that was really big, branched into more of a consulting side of the organization when a lot of the regulations changed. And when the company ended up moving from, I actually came down to Florida with them from Pennsylvania, then they moved to Boston, and I actually stayed in Florida, and so I branched out. I decided I wanted to reach more people, and I wanted to stay in that field without having to travel outside or move away. So I've been doing student loan management for quite a while with my own company, Degrees of Success, 5 years now. And basically we have three main products, services, so to speak, that we actually help students or graduates with. One of them is helping those parents and families getting their kids into college and FAFSA applications and scholarships and all of those things. Our biggest product, product that most clients are looking for, is student loan management. And that's all about, how do I handle this debt now that I'm out of school? I've racked on $30,000, $50,000, $100,000. What are the avenues? And there's 7 different repayment options that are available, and most people have no idea they exist.
I thought the best avenue was to jump off the bridge.
Right? Well, with that kind of debt, a lot of people stress out over it, and it makes sense.
For good reason.
Because if you have no idea, how to deal with it, when you're looking at $100,000, $200,000, and you come into an economy that we've come into, and we see that people aren't making the money that they anticipated, going to college, you think, I go to college, I get a degree, maybe I get a master's, I should be, making $100,000, you'd hope, and that's obviously not the case. And so now it's like, okay, now that I'm not making the money that I anticipated, what do I do with this debt? How do I manage it? What are the different options? And there's lots of government forgiveness options that are out there too. Money sitting on the table every single year, because people do not recognize the fact that they have these different options. And, just like anything else, you don't know what you don't know. So until somebody can come and say, okay, here's what you have, here's what you qualify for, here's the bucket you fall into, you just can't do it yourself in most cases. It's just like taxes. A lot of people think they can go and do their taxes themselves, and there's a lot of money that sits on the table because they just didn't do it correctly.
Well, it's funny. I was being interviewed earlier today on a program, and the host wanted to get to the whole, from the slant of people who want to do their own taxes. And basically I said, kids, don't try this at home alone. It's
right.
And what I came to realize, I had a client, this is a typical example, by the way, why you shouldn't do your own taxes. I had a client, their kid graduated college, ties right into you, and so figure, she just files a W-2. Well, she forgot to claim the college credit, and she lost $2,500. Oh,
wow. So
if we're trying to save $200, they cost herself $2,500.
Yeah, exactly. And that's the same thing that happens with student loans. There's $100,000 in forgiveness that's available, but you're trying to save $500 and $600, not paying somebody, but you could have gotten $100,000.
So let's go into that, because I keep hearing this, and I want to understand how this whole forgiveness to debt program. Now, is this something new that passed, or has it been around?
Well, one of them has been around for a little while. So 2007, 2008, they did it's called Public Service Loan Forgiveness. Okay, so that's anybody in the public sector. So whether you're a CPA working at a nonprofit, or you're a doctor working in a hospital, or you're a police officer, or anybody in the public sector like that can qualify for forgiveness after 10 years. And essentially what it means is that more than likely your income doesn't match your debt. So what happens is the government allows you to make a lower payment than what you would make standardly, and whatever the difference is at the end of 10 years gets knocked off. So that's one program.
Now that's if you're, again, if you, I thought this for people who went into like, I don't know, like the Appalachia and that kind of thing.
Appalachian?
You know what I'm saying? No. I'm just saying for people who worked on like Indian reservations and go into the, I thought there's some type of debt forgiveness for that, or that's a different program.
Well, I mean, yeah, but it's not widely used. I mean, there's all types of smaller forgiveness.
Okay, so all right, so then I'm not talking about the right thing. So you're basically just talking about you were employed in the government sector, and you can
or nonprofit or local, librarian.
But what happens? Let's say you work like 9 years and 5 months, and then you take a job in the private sector. Then that blows the deal, then, doesn't it?
Sure does.
So you have to be. Well, that would be pretty stupid, but
yeah.
But you have to be 10 years straight, or it can be like
No, it doesn't have to be 10 years straight. So it's not consecutive. It's 10 years of timely payments. However, whenever that happens, you could do 2 years you made payments, 2 years you were in deferment. Maybe you didn't do public service for the entire time straight, but you got back into it. 5 years in, you went out for private, you came back. That's fine. It doesn't matter. So it's not consecutive. So
okay, so that's all right. Now you can do. Now is this where like, is it only federal or any private, any college loan program where you can pay like 10%? It's based upon your salary. Like you can't pay any more than 10% of your income.
Yeah. Well, it's 15% of discretionary income in most cases, sometimes 10% discretionary income, but it is for only federal student loans. Now, federal would include Sallie Mae, Great Lakes, Nelnet, as long as they were federally funded and they're not private loans.
So, okay, all right, so now I interrupted you, which is, of course, what I try not to do. But, so that's the first option. Now, you said there's some other options for forgiveness of debt.
Yeah, there is. So somebody who's not in the public sector, who's a regular Joe Smo working at a regular job, would still qualify. There's a 20-year and a 25-year program that's available. And those are based on specifics like when you went to school, when you graduated, and so forth. And I won't get into all the little details, but just assuming let's just say somebody graduated this year, and they get a regular job, but they're just not making a lot. So say they have $100,000 in student loans, maybe they're only making $40,000 a year. Well, that's going to allow them to have a reduced payment year after year on their student loans. That means they're going to have a balance at the end of 20 years because they were not able to pay a standard payment that would pay off the debt in that time frame. So whatever that balance is, it would also get forgiven. But if you notice, it's 20 years instead of 10 because they're not in the public sector.
Right. So that's anywhere. So you can be any kind of job, and you didn't put in your 10 years, so you have 20. So as long as you eke it out 20 years, and you have to always be current, I guess, right? You can never be delinquent.
Well, you can't be defaulted. You could have been late.
Oh, lates are okay?
Yeah, you can be late as long as you turn around and pay it. So, if you're 30 days late, you turn around and pay your payment, you're okay. You just have to make so many months of payments. So 240 payments is what they're looking for. But, of course, you couldn't go into default. Then you no longer qualify because you're not making payments. But you can be in a program where the government says, you know what, your income is so low that we're going to allow you to have a repayment amount of 0, which still counts as being in repayment, and it counts as a payment. So you could be in a 0 payment program for 12 months, for example, and still qualify for, after the 20 years, you could still qualify for your forgiveness because that first 12 months where you were making 0 payments still counts as 12 payments.
All right, so now, by the way, just to clarify, is this only federal loans, or it could be any kind of loan?
Loans.
Just federal. So those are the plus loans.
Plus loans would qualify. Stafford loans qualify.
So now, By the way, what are the interest rates on? Are they still like around 8.5% or something on the plus loans?
Yep, 8.5 for plus. You'll see sometimes a 7.9. Even every once in a while, you see like a 7.21, depending on when they took it out. But yeah, standard 8.5, and then the Stafford federal loans are 6.8 standard.
So that's amazing. So yeah, can you imagine 8.5% today in this day and age? Banks are, you're earning 0.1% of your money, and the government's charging you 8.5% to borrow from them.
Exactly. Yeah.
That's criminal.
About 800% higher interest than banks.
Criminal. So basically, following this plan, one should only take federal plus loans with the intent of never paying it back, other than like minimal payments.
Loans. Yeah, because keep in mind the plus loan is only for grad students. An undergrad cannot take out a plus loan. Only
no? So what are the general federal loans then that I thought they were offered undergrad?
It's going to be Stafford, subsidized and unsubsidized loans.
Yeah, but that's only like $5,000 or something, right?
No, not necessarily. It depends on what year you're in.
Okay, or whatever. But okay, maybe think of the subsidized. They're probably limited to like $5,000 to borrow.
$20,500, for example. Say you're year 4 undergrad, you could get $20,500 every single year in unsub loans potentially.
Okay, so, but okay. So now I'm trying to understand this because I'm slow.
Okay.
Why? Thank you. You're being very kind. So so we're doing all this with the money, and but again. So if plus loans are just for grad school, what federal loans other than Stafford or undergrad?
Well, there's Stafford loans, there's Perkins loans. Those are a 5% loan.
Okay, but again, if you go to, say, Wells Fargo to take a loan, this program doesn't apply.
Well, keep in mind, regulations have changed. No bank can offer you a federal loan anymore. It has to go through Department of Education. Those days are over. So back in 2004, 2005, you could go to Wells Fargo, you could go to Citibank, you could go to Sallie Mae, and you could say, hey, I want a federal loan, and they could give you one as a lender. Lenders are non-existent anymore in that sense because every single lender has to be Department of Education for federal. So they've changed that. So the government has taken over completely. So now you might have your loan serviced by one of those companies, and a lender is two different things. The servicer is basically just the person that does the paperwork, collects the money, sends the bills out, but they're not actually the bank that lent the money. That's only going to be Department of Education. So you have no options. So somebody going into school right now, it's not going to be the same, and a lot of parents think, oh, well, yeah, I went to school and I did this and this. It's completely different. So whatever...
Yeah, the rules are changed, so it's...
Rules are completely changed. So if you want to take out a federal loan, it's going to be Department of Education lender. You can't go and shop around for a good deal. So,
but clearly, I mean, if you're really one's going into with the intent that you're not going to pay it back. So it doesn't matter what rate they offer you because we can go into this now. Can they, like 5 years in, change the rules and saying, well, we were going to let you go, bankrupt on these if you did, if you waited 20 years, but 5 years from now we decided we're not going to do that anymore?
No, they can't go backwards on it. And it's not considered going bankrupt on it because it's actually forgiven by the government. But no, they can't go backwards. But if anything, what we're going to see over the next few years is we're going to see a big change in regulations. They're looking at allowing for bankruptcy on student loans, which has not really been allowed. There's a very small percentage, like less than 1%, like 0.001% that can. We're going to see that come through the pipelines probably in the next 5 or 6 years, where they're going to allow for student loan forgiveness. We're also going to see some other regulatory changes that come through that should end up benefiting the client rather than hurting them. But, keep in mind that these programs that I mentioned, it's not for people that are making good money. If you make $100,000 or more than likely you're not going to get a forgiveness. Now, it depends on student loan balance, it depends on family size, it depends on a lot of things. I do have clients that make $200,000, $300,000 a year that will get forgiveness. But they also have $400,000 or $500,000 in student loan debt.
Okay, so bottom line, this is really like a backup. You don't want to go in, as I mentioned, just to kind of go willy-nilly. You don't care because you'll pay a higher rate. You may have this, but if you happen to make money, and make more than, and your income is more than what the debt is, you won't get that forgiveness then.
Exactly. Absolutely. Yeah. Yeah, if your income's higher than your debt, more than likely you're not going to qualify for any options unless you have a large family size. So if you have a family size of, say, 5 or 6, that could change things. But as a whole, yeah, you don't want to go into it thinking, I'm not going to have to worry about this debt. I'm not going to have to pay back. That's not the case. It's really made so that anybody who anticipated some type of option to go out into the market to make money and it just didn't happen will have some opportunity to get some of the loans forgiven. But it's not for...
But here's the point. There's got to be some threshold where you're borderline. And for those people, if they made $5,000 less, they get, for argument's sake, all their debt is forgiven. Right? I mean,
well, there's definitely borderlines, and there's definitely thresholds. And that's where, we come in here at Degrees of Success, because we actually calculate through an assessment what you qualify for. And it's only $50. It's a $50 assessment for somebody to say, I don't really know for sure. Let me find out. And we'll calculate all of the different programs. Like I said, there's 7 different repayment options. There's 3 different forgiveness options. We'll calculate everything, and then we can say, okay, this is what your new payment amount would be. This is what your forgiveness amount is. If you did this would change things. And there's different ways of doing the taxes as well. If you say you put more money into your 401k, which is just your AGI, then maybe you're going to qualify for a larger amount of forgiveness. You really have to think outside the box, and you have to...
Right. So I'm curious, though. So really is... But do they look at, like, the 1 year? Let's say you it was private debt, and 20 years you're out. They look at how much you made in year 20?
Well, every single year you have to reapply. So technically, yes. So if you apply
in other words, you can get laid off from a job or whatever. Not going to say laid off, but you can, change jobs, downsize, and then by doing that, be able to qualify to pay, to get this all knocked out.
Yeah, you could. But, we're looking at it over a time frame. So, let's say you worked for 18 years and you made good money, and then the last 2 years you didn't. Well, more than likely, you're not going to have a balance remaining for the government to pay off, because you've probably paid standard payments during those first 18 years. You know what I'm saying? So
yeah.
It's really looking at, like, overall, where has your life cycle been? If you've had a life cycle of you've only made $20,000 every single year for 20 years, then yeah, you're probably going to qualify.
Right, so you're looking at the overall pattern and all that. So it's not just...
Exactly. So it's not like a one year and magically now you qualify for this large amount of forgiveness. It's not going to happen like that.
Although, if you, for argument's sake, you had a run like that and you went bankrupt, I mean, I would, that would be actually factored in, I'm sure.
Oh, yeah. It definitely, everything gets factored in. But every single year they recalculate what your payment amount should be for that year. So every 12 months, new paperwork has to be done. You got to keep on top of it. Keep all your taxes, make sure you have all your employment records, and make sure you're filling out your documentation to your servicer every year in order to qualify.
So, so what typically, can you throw out like a number? I mean, I guess it depends on how much debt you have relative to the... Like I'm thinking, I know people who go into. I know somebody. His son's going into physician assistant school, and it'll probably be like $120,000 by the time he's done. So, but if he makes $120,000, he's not going to get that debt forgiven. Then I guess.
Well, it depends. More than likely not. So if he's got $120,000 in debt, but he makes $120,000 in income, and his family says it's just him, probably not. Probably.
Well, that's true. That's assuming you're right. He doesn't get married and all that, but he obviously gets married.
He ends up having, 2 kids. His wife doesn't work. That changes things.
Right. But the other half, the wife does work. Then all of a sudden that deal doesn't work either.
Well, potentially. I mean, you can always file separately. There's ways of doing that as well. So, and that's where somebody like you comes in.
Right. Well, I can do the tax calculation. I'm just figuring out from the debt calculation. That's where you come in.
Exactly. Well, exactly. So yeah. So you get the taxes done separately so that you can qualify for the different student loan options, and you run it both ways. And I do a lot of communication back and forth with my clients' CPAs, so that I can tell them, like, okay, if we do it separately, here's how much they save in student loan payments and forgiveness options that they have. But what are the tax implications? How much are they going to end up paying into the IRS? and figuring out which one's the best option.
Gotcha. Hey, Jen, we are out of time. When you come to Philly, you're coming in March, right?
Yeah, I should be back sometime in March.
All right, let's see if we can get you back in here when you come in. And Jen Dobson, and give a plug for your website and all the magic gifts you can impart on our young minds
definitely.
and pockets today.
Yeah, definitely. So website is going to be degreesofsuccessinfo.com. Anybody that goes there, click on appointment. They can schedule a free info session to talk with me. Also, if you go to Amazon.com, type in Genevieve Dobson, you're going to find my 3 books. And then, of course, anybody who wants to just call it, it's 813-528-1102. And anybody who listens to the show today and mentions it, I will give them a 10% discount on their first assessment.
Well, I may call anyway, even though I don't have anybody in that situation, because I just want to call in.
Perfect. Well, that sounds good to me.
Hey, Jen, it's a pleasure. Thank you so much. Look forward to seeing you again in the near future.
Perfect. Thank you.
You're welcome. And that wraps up this segment of Greenberg News. We're going to take a brief break. Be right back after these messages.